Okay, now we have the moment of truth. Putting together our balance sheet. So this is where we'll see if we did everything correctly, and it's the hardest one to put together. Okay, so I'm going to go Brin Inc. balance sheet, and this is as at March 31st. Okay, so I'm just reporting the March 31st numbers. So I'll start out with my assets, and I want to do a classified balance sheet. So I'll list my current assets first. So I think the easiest thing to do is put your previous year here. So I'll just say previous year. So on a real balance sheet, we always show the previous year on the right-hand side, and then your current year, so this is my March, on the left-hand side. So I'm just going to move the question down a bit. Just so I can copy this balance sheet. Okay, why are you not copying down? Okay, so my cash for the previous year was $48,000. So let's just get the previous year to work. Then my accounts receivable. For the previous year was $224,000. So I'm just looking at their trial balance, not their balance sheet. Then they had inventory for the previous year of $60,000. And when we add those together, those are their current assets. And then what we're going to do is we're going to add in our long term. So I've got my property, plant, and equipment. So I'll just say buildings and equipment. And when they say net, that means that it's the cost minus accumulated depreciation. So that's $360,000. And then I have my total assets. And I'll double underline that. And now I'm going to look at my liabilities and shareholders' equity. And we'll start with my current liabilities. And in this case, it's accounts payable. And that is for the 93. Now, normally I would have notes payable, but we did repay that bank loan. So we didn't have anything owing to the bank this year or the previous year. So that won't go on this schedule, or on this balance sheet. But if we did, you would put it on here. Okay, so it's just the accounts payable, and then there's actually no other long-term liabilities. So then I just have to do my shareholders' equity. And I'm going to take my capital shares. So that was 500,000. So just right there, and then my retained earnings of 99,000. Okay, and then we're going to add those up. And then first of all, make sure it balances. So that equals that. So I'm putting dollar signs on the first and last numbers. Okay, and I actually want the current year bolded, not the previous year. Okay, so let's go find these numbers. Your cash is the ending cash balance on your cash budget. So I'm just going to go equals, find my cash budget, and it's that number, 43,100. Now my accounts receivable is what's left collectible. So if hopefully I showed this, if I go up to my cash collections budget, and then I see here that the collections in the following month, so I'm looking at April, is the 240. So anything that I still have left to be paid on my sales for the quarter, whether or not they happen in April, May, June, I need to account for those now because that's the amount that I need to collect. Then the inventory is your ending inventory, so from your purchase budget. So that's the 30,000. And now we can add those up, and then that is your total current assets. Now the equipment is a bit tricky because we're going to do previous year, then we want to add all of the equipment that we bought this year. So I'm going to go up to my cash budget. So I bought 86,000 worth. So when I go enter, this is last year's plus what I bought this year. And then I just have to subtract out my depreciation. So I'm going to minus this 42,000. So I'm going to show it as, did I do this right? Let me redo this. The buildings from the previous year, net, or that's the previous quarter. Then I'm going to add all of the purchases of equipment and then subtract out my depreciation. Okay, and I got 404. Okay, and we'll just total this up. So now my accounts payable is what's owing at the end of March. So if we go to our purchase budget, so you'll see that, did I even fill that in? Okay, I might have to finish this one off because I need to know what's owing on these purchases. Oh, I did do it. I was just looking at the wrong schedule. So this is my cash disbursements of purchases from the stuff we did above. So that's the amount owing. So that's why I had April there. So I'm going to grab the 82,500. Okay, so that's good. Then we can assume that our shares didn't change because if they did, they would tell us. And so I'm going to show you retained earnings two different ways. So I know that my assets equals liabilities and shareholders' equity. So at the end, those have to be the same. And then I know that my total liabilities and shareholders' equity minus anything you have on there will equal the difference, because then that's going to be 714, 100. Okay, so I already know the answer by plugging it. So that's the number I'm trying to get, 134,600. So I'll unplug it. And because I'm trying to put this in proper form, I should put a line for total shareholders' equity, and then this is total liabilities and shareholders' equity. So I'm just looking for this number right here. So what I can do is tell you that opening retained earnings plus your net income minus your dividends equals your ending retained earnings. And I'll just say current quarter, previous quarter. So let's try and do that. So our opening retained earnings is 99,000. And then we're going to add our net income. So that's the earnings after tax. Then we're going to subtract out our dividends. So our dividends that we paid were 45,000. And let's see if we're correct. So that came out to 134,600. There. So now we balance. So yeah, you can plug that, but I like to work it just to make sure that you didn't make any mistakes, because this is where we'll find out if we made a mistake. And then just to show you how I did buildings and equipment, I did previous year. Then I add my equipment purchases, and then subtract out your depreciation. And then that will give you your new building. Okay, so now that we've balanced, I'm pretty happy, and we are done the master budget.